Good morning, Predicted Trades family. Hope everybody's doing well. Oh, time to dig into some prep. So if we look at where we're at, it is an OPEX week. We are, obviously trading in a range and not trying to break out or necessarily break down. We started this week in between 4136.5 and 4200. We fought up to 4200. We fell back and pretty much tapped 4137 yesterday at the low. And now we sit here coiled right near it. We have a number of stack squeezes in place. Our 4 hour is still intact, the top of which is near 4195. And the bottom is right at this key level, 4136.5. As we can see, pre-market, we're already getting a great response to that squeeze bottom and coming right back to VWAP. Daily 15 also sits right there, pretty much 4150. The daily 8 sits above at 4156. For most of this week, we have tagged the daily 8 and gone up. We have held it and gone up. Yesterday we closed below it, or we opened below it, fought above, closed below it, and now it sits as resistance above. One thing I also want to point out, POC. So for most of the week on ES, POC, point of control, was sitting at 4131. So sitting down here just a hair below 4136. And then after Wednesday's price action, when we came into Thursday, POC stepped up to 4170. And yesterday we rallied right to that 4170 and rejected right back down. Hard. Overall point being, we need to take note that the sentiment might have shifted. POC was below as support, and we kept rallying. We kept having pullbacks, but got nowhere near where POC was, and we'd rally back. Until a point when enough volume exchanged hands that POC stepped up to 4170. And then yesterday, we rallied to it and rejected it. Overall point being, there might have been in the market a net long going on. And then, after we started to shift into a downtrend, POC stepped up, we rejected it, meaning that overall, the market might have a net short view for the future. Now, what changes that is if today we do rally to current POC, we hold and then push through it to get back up. We have to get through this trend line, which today sits kind of near 4160. We have our daily 8 right at 4155. So, overall thesis is we have strong resistance at 4155, 4160. I'm somewhat expecting a rally up to test that. We might have a little dip to retest pre-market lows before that rally happens. But I'm expecting us to try to get up and test this 4155, 4160 during the cash session. Now, if we can't get through here and we just keep rejecting, roll over and lose 4155, and then reject it on any bounces, then we are going to come down and test 4136.5, 4131, what POC used to be, and then likely slip down to the daily 21, maybe even our zone below. We would get all the way down there because we are at the bottom of a 1 hour, 2 hour, 4 hour squeeze, and if we give that out, it will be some extra momentum to carry us down. But overall, if we can hold these squeeze bottoms, hold yesterday's low, pre-market low, creating a nice little zone of support. You see how they do that? You can see those pre-market lows near around 41.40, 41.41 and a half. We have our yesterday's low, 41.37, key level 41.36. So basically, like a 5-point zone of support right at this squeeze bottom. So if we dip down, we want that to hold and reverse back up to test this trend line. We could just open and make the pop up early to see how this goes. If we do get up here during the cash session, as long as we keep holding that daily 15, 41.50, we can get through late day. Excuse me. But overall, we have our support at our squeeze bottom. Should that give out, we have our targets below. But if we can hold that support, rally through resistance, as long as we can get through 41.60, hold it on the way back, we can get up to that 41.70, yesterday's high and current point of control. And then we can rally right on up to our zone above, top of the 4-hour squeeze. But it is an OPEX week. We are in a huge liquidity pocket. We are in between what point of control used to be, what it currently is. We're right at the daily 15, this orange line, right at the daily 8, this blue line. And this 1-hour squeeze sits right at that 41.65. So we need to be ready on an OPEX week that we just stay in that 1-hour squeeze. We chop in this zone. There's no clear breakout, breakdown, but we at least know where our resistance sits, our support. Should those start to give out, we have our targets to get to, below and above. So that's what, at least every morning, I try to cover in our preps. Where our support lies, where our resistance lies, what are the targets for a breakout, breakdown. So yeah, let's see what we get today. I think that's enough on ES. The only other thing I wanted to cover is if we look at the daily on ES, and I'll even back out a little bit, we've had our rallies up that flipped our moving averages bullish, right? And then once we broke those, we reject and head back down. We've tested our supports, trend lines, daily moving averages. We've had our inverse head and shoulders, all these patterns. We are up near a potential double top. And if we look back, every little rally up has stalled at this zone, 4180 to 4200, which has sent us back down. That's why everybody and their mother is screaming back down right now. Short, 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 we're heading back down. But we need to be prepared for the possibility that maybe we've had enough of the falling back and it's time to break out. I will say though, as far as Keltners, we're right near the daily mean. So basic point being, if we zoom in here a little bit, every other rally up to this zone and to break out, the mean still sat very far below. And if we look now where the daily 21 is, this white line, it's the highest it's ever been for a potential breakout. If we just look left, the daily 21 now is where the daily 8 was on the last attempt to get through. So just saying liquidity is slowly moving themselves up against this resistance. And if that doesn't make sense, I'm going to just kind of repeat it again. Liquidity, which I like to think of the daily moving averages and our point of control as liquidity, right? If we look at each rally up, the June, July rally was very strong and got us right up to that trend line from last year's highs. Setting the next target if we can break out up near that 43.27, right? But then each rally since, we get on up here. Our daily moving averages still sit way down at 4,000. So we have to go back down. We try again. Our daily moving averages sitting down near 4,100, getting closer. We have to go back down again. And on this attempt, now our daily average 4120, much closer. And basically they are trying to build energy to create the breakout, potentially, right? And as far as I'm concerned, looking at the daily, we can even afford ourselves another pullback to 40.55, where the daily 50 sits, or even down to 4,039.75, where the daily 200 sits. We could very easily have that pullback, still set that lower high or that higher low, and create another drive, still getting our daily moving averages even closer to that breakout point of 4180, 4200. So we need to be ready for the scenario. And we have our micro view to know if we start to break this down, we're going to get the reversion of the daily 21. And as I move my cursor over here, keep an eye over here. We'll get that reversion down to the daily 21. If that doesn't hold, down to 4,100, which is the trend line right there from the lows. And if that even can't hold, then it'll be down to that daily 50. Just trying to visually knit this all together for you folks. It's not surprising in an OPEX week we run into a resistance where they drop it back and there's strong rallies, strong pops. They are balancing. Monday, down, up, gap up, down, gap down, up. I mean, they are balancing in here. So let's see if we can hold up today and push back up to even or further to break through resistance. Let's see if we just stay in this range, or if we give up our support, head down for a reversion to the mean, maybe even through to set up in the next week. We do have big tech earnings. There's a whole thesis around if we drop today, they're loading into tech earnings for next week. There's a thesis for on every drop this week, they've been loading into tech earnings, and now they're ready to kind of rip it, to leave everybody in the dust. So just be ready. It's a Friday. It's OPEX week. Keep your expectations in check. Play the tighter range till it starts to break. Lock profit. Don't be bag holding to think that we're just going to rip our face off today or completely give out. But be ready. What I like to say is play the range till it breaks. You get into an option, let's say 50 cents, it goes up to 75 cents, you lock a little profit, it keeps coming back to 50 cents, you keep doing it, you lock some profit, you leave some runners. If a breakout happens, you're going to see a great return. If we stay in range, you're going to get your base hits and you're going to do fine. So, that's enough for ES. Let's start digging through our other names. In Q. Already got its reversion to the mean. Tagged it yesterday, pre-market, and during the cash session. I'm sorry, folks. Give me just 1 second. Alright, sorry about that. So today, just like yesterday when I put my thoughts in text and prep in the last couple of days, we are back here near 13,000. We have the daily mean at that 1325, let's call it. So zone of support. We've already dipped into it pre-market. Let's see if it continues to hold. If it does, then it's a rally back up to 100, 150, 200. Let's see, our POC sitting right near 150, right up near these daily moving averages. So just like on ES, it's hold support, play back to POC to see if we're going to reject again. You know, we've got a down channel, and we've already tested the bottom of that down channel and starting to pop. So as long as we hold support, it's a rally back up to try to test daily moving averages, POC, top of the down channel. Start to give out support. It's down to 12,950, 12,900. Even that recent low was 25. So you got 900, 925, 950 as targets below. Should we start to give out 13,000? Ready. Everyone should take note of this. Ready looks very different from the other indices. Small caps, right? If we're really going to sell off, we should be seeing small caps starting to look weak. And what have they been doing? They have been sitting in this little range, right at daily liquidity. All week, all 2 weeks, really. They've pulled back, popped, pulled back, popped, pulled back, getting tighter and tighter. You could draw a wedge, just like this, right? I'll do it live just to show you guys. Boom. And I'll go with these less extreme ones. There you go. So, OPEX week, squeezes, getting tighter and tighter, wedge, going into the end of the week, daily moving averages, all stacked right here. Ready's going to be any sign of a breakout today, right? I could foresee a scenario where we get through this trend line, hit the next squeeze, pull back, hold, and then try to continue. That's what a breakout would look like. I could see a scenario where we reject the first squeeze and trend line first, head back down, try to hold the bottom, and then give out. And I could see where we just tag one, come back, tag it again, come back, stay in this zone today. So, maybe keep a little side eye on the Ruddy as a bit of a gauge. She does tend to like to lead. I say lead as in, since it's so many companies of varying sizes, we can see it oscillate first. So we can start to see that Ruddy might start to break out and all of the other indices are hanging back and waiting, and then they start to break out. Doesn't always happen that way, but that's why we keep an eye on Ruddy. But squeeze targets above, and if we start to give out, it's just back to recent lows. 1785, 1780, 1765, 1770. Moving on, YM. YM, I like this. This is actually also going to be another good gauge. Because we are already pre-market near the top of our 30-minute squeeze, near the daily 8, and near this trend line from the last few days' highs. So if YM were to hold 33,900, 915, you can see we had a little top out there overnight. We rejected it again, and now we're above it. So I would, right around here, drop an alert for if this breaks below. That. And then I'm going to drop myself another one here near 900. Come on. There we go. At or below 900, give me an alert. And there you go, 15-point range to see, can we hold up early on YM and start to break through resistance and start to show a little strength, hold on a pullback to try to keep going, or do we give out what should be a local zone of support, 900 a psych level, that to call it 39.15, obvious resistance now above, needed to support. So nice little 15-point zone on YM to give us an indication early. If we just dump right through it, we're going to likely retest it to reject and go down. Or if we can hold it up and start to break out, maybe YM's going to try to help lead the charge today. Overall, if we can start to get going, back up to 34,000, and 34.50, we've got a 2-hour squeeze. 4 hours up at 34,200. Could we break out and get some strength? It can happen on an OPEX Friday. But overall, support down near the key level, 33,800. So if we reject, and start to head down, target 33,900, 885 or 880 where that daily 15 is, and then down to 800 for to retest lows from yesterday in pre-market, bottom of the squeeze. Should that start to give out, then it's down to 33,650 where the daily 21 sits. Moving on, Apple. Interesting pre-market, been very strong, trying to hold up, and now dumping down and about to open below the daily 8, near the daily 15. It's all about this squeeze bottom. We have our pre-market low down near 163. Squeeze bottom starts kind of near 164. So unfortunately a wide $1 zone of support. Let's see if that holds early on Apple and starts to send it back up to fill this gap. I'm curious if this is on news or sympathy or something, but let me know in the chat on YouTube if you find anything on news about Apple with this gap down. Could be something as stupid as like they just said, oh, we expect production or demand to still be a little behind or whatever. But anyway, let's see if that squeeze bottom hold. We're going to be right near it. Could lend to a quick pop back up to try to fill the gap, which would help the market start to take off. But let's see if we start to give out that 164, going down to test 163. Should that give out? I mean, daily 21 is going to be right near there. See how it stair steps up. We won't know where it'll be till open, but likely it'll be pretty close to that pre-market wick. So should that start to give out, then it's likely back to 160, 159.5. Let's see if we can hold up and just stay above 164 and chop for OPEX. AMD. Actually, just for fun, I do want to check in on this. What this is an aggregate chart. Basically, you can combine tickers. And normally I have NVIDIA in this, but I took it out recently. But overall, it's just like big names in tech. What's going on if you were to average it out? and starting to get a little bit below this daily 200. As silly as this might all sound, it still does kind of work. So, well, I'll keep an eye on this one early. Actually, I'll just throw an alert right here. Should we start to give that out, I'll get an alert and say, it might be going down. But bottom of a daily squeeze, daily 50, stack squeezes. And if we get above this, it starts to spell more of a breakout. Sorry, this probably is not making sense to anybody. That's totally fine. Well, let's move on to AMD. AMD, a resistance line I drew way back here, still was giving us some resistance, but yesterday, strong breakout. Now we're back. Ultimately, if we were to retest this trend line, we'd be at the bottom of some stack squeezes right near a key level that we held. Overall, we're going to be opening in the middle of these squeezes and right near our last bounce point yesterday. So on AMD, should this 89.5 start to give out early, then we are likely coming down to test 89 and then down to the daily 50 again for a bit of that double bottom action, right? If we can hold up 89.50 or 89 early, could get a rally back up to 90.5, 91, back up to squeeze tops and near yesterday's highs and back near daily liquidity. Yeah, I think that's good for AMD. Amazon, very different, very strong, trying to lead. I know a number of folks were hitting Amazon this week in the room, and I feel like I saw some folks were maybe swinging some, so about to be looking good for y'all. Overall, if we're going to be opening up here, as far as a local support, I'd want to be seeing 104.75 to 105 hold on any retest to try to just continue higher and break out back to that daily 200, which sits up above at 107. We do have a daily squeeze top here, but it's starting to open up, and it could be very simple that it makes a quick move up and then comes back and settles in that daily squeeze top. If that 105, 104.75 starts to give out, I'm just looking left to that high that we rejected midday. We're about to open above it. So it could become local support to try and get us even higher. If it starts to give out, then it's back to 104, 103.5, and the bottom of these squeezes near 102.5, 103. Google. So Google, had that news about Samsung and search engine and switching to Bing, yada yada. Fell back to daily liquidity, peaked below the daily 21 once, twice for a double bottom off of our key level right near 103 and made a nice move yesterday. So it could see, it's been a while since I've been seeing Google lead, but could be one of those days where we start to see her try to lead back up to this 107.5. We do have a squeeze top up near there as well to keep an eye on. And if we can't get through 106 and start to roll back over and lose that 105, 104.5 local support, then we'll likely fall right back to the daily 21 near 104 and maybe retest that 103 again. We got a little 30-minute squeeze there that'll kind of give you an indication. We start to lose that, and that 30 fires down. It'll give momentum down to the 21 and that 103. Moving on, Meta. Back to the daily 21. Big gap down. So Meta and Apple with the gap down. Amazon with the gap up. Very interesting. Let's see if this 210 can hold today, right near the bottom of a 2-hour squeeze and the daily 21. As long as we can hold that support, then I'd be playing Meta for the gap fill back up to that 212, 214, and if she can keep pressing back up to these daily moving averages, yesterday's high near 217. But if she starts to give out that 210, probably want to keep our eyes down to 208 and 205. And it could very easily be a chop day where it's just 210 up to 212 back and forth. Microsoft. Made it back to the bottom of all these stacked squeezes. Daily 21 right at the bottom of that squeeze. So why not throw a little alert? If we start to give out 284, likely coming down to test the daily 21 in the bottom of the squeeze near 280, 275-ish, let's call it. But if we can hold 284 and get through 285, then it's a play back up to pre-market. Well, where the gap from the app, oh geez, where did we close? 286. Yeah, it'll be a play back up to 286 to fill the gap. And then if we can get through, let's say 287, where the daily 8, daily 15 sits, up to 288, 289. Top of the squeezes. Start to give out 284, down to 280, 275. Should that give out, down to 280. Not MU, Netflix. Netflix had a nice day yesterday. We had that earnings rigmarole and a little slip down. Then a pop right back to these daily moving averages. So Netflix, Tesla, gonna have a little bit of a side eye on these things today. Should we start to give out, this little last bounce point, just thinking about local range we're about to open, should we start to give out, I'm gonna make it 323.75. Then it might be a playback to 320, 318-ish, where we took off from yesterday. And right about there. And if we start to take off through 326.5-ish, then it's a play back up to 330, 332, and maybe back up to 340. They've had their earnings, dipped down, hit first Keltner to the downside and took right back off to the mean. Could be that they're ready to rally right back up and start a potential takeoff. Earnings wasn't necessarily so bad. It was a crazy wick down and then right back up. And the counter to that is, I'll just say we've seen Netflix go down on earnings like this, open down here, and keep going. That's a bad reaction. This wick back up and that rally yesterday, it just smells a little different. So we can hold here. Could be a nice play today to get right back through these daily moving averages and carry through. POC sitting at 331 above. Point of control where most of the volume has exchanged hands this month. And it's about to be OPEX, could see a reset right back up there. Could see that magnet and then a cannon effect. So, going to have a little side eye on Netflix today. It could be a mover if we are going to go to the upside. Oh no, don't freeze on me, DOS. Come on. Every so often this happens. In the middle of a prep. There we go. So NVIDIA fell back through, kind of that local support that kept bouncing it the last few days. So let's see if we pop up quick to test it and reject back down to the daily 21. Or if we pop up to test it, get on through and hold it, then it could be another play right back up to this local resistance. Oh, thank you, Carl Jones. I'm seeing in the chat you didn't see any news on Apple, so just some interesting rotation. Some names are up, some names are down. OPEX weak. So on NVIDIA, let's see if we hold pre-market low, start to head back up to this zone. If we can get through hold, maybe back up to this zone, we could call it, from the last few days. But if we reject, take out pre-market low, back to the daily 21, and if that can't hold, then likely down to recent lows, and maybe the bottom of this daily squeeze. QQQ. Oof. Whenever a chart loads and I see what's going on, my first thought is like, look left. Where's something? Something interesting. Like this wick on a strong day back up, right? Yeah, I'll just send this. Wrong thing. Come on. There we go. So, a very interesting bounce point, slight rejection point, creates a zone that the daily 21 is caught up to for QQQ. So, not going to be shocked today if we take a little dip, lose 315, and come down just to test this zone and the daily 21 in the bottom of these squeezes. Could be a great spot for a reversal back up to actually get through what is resistance right now that we keep wicking back from. This 316 and a quarter, 316 and a half is the resistance that we rejected, sold down pre-market, tapped, came back down. So we've got our local resistance, local support. Could be stuck between these two today. Again, let's zoom back in a little bit. The bottom of that, 314 and a half, let's call it, yeah, just 314 and a half, right? So could dip down to 314 and a half, daily 21, bottom of squeezes, an interesting zone where we had a bounce before, a slight rejection. Could be a reversal point to come up and test this 316.25 to 316.50. If we can get through that and hold up to 317.75, 319 at the top of the squeeze. But if we reject, roll over and lose this zone and have a full breakdown, 313 and then 312, 311 and a half on QQQ. SPY. So looking a little better than QQQ did there, where it had come up and already fallen back. So it could be more seeing rotation into YM, like we saw up near the top of its squeezes, and ready. Could mean that NQ is a little bit of a laggard today. With tech earnings next week, they might want to keep it down and scoop up those calls as they're getting chewed up on theta. So, on SPY, 412 going to be the resistance right now. If we can get above 412, hold it on pullbacks, then it's a play up to 413, 414. If we reject 412, and we see the indices take a dip, and it's back down to 411, 410. We've got key level of support at 410, daily 15, 410 and a half, bottom of squeezes. If we start to give out 410 down to 409, 407, 75, just call it 408 where the daily 21 sits. But if we can hold up 410, get through 412 up to 414 again, and you have your trend line of resistance. Let's see if we're basically pinned between 410 and 412 today for OPEX. Tesla. So, reported earnings. Comparing it to Netflix, we opened lower and went lower, right? We are at the bottom of a daily squeeze, and we fell through first Keltner, second Keltner, and we're not far from third Keltner, which is starting to signal a little bit of an oversold if we were to get down to 158, 160. So overall, even though it's not as local as I'd like, 158, 160 kind of support as far as starting to get oversold, right? So if we do get down to 158, 160, they could be building to go back long. Not even saying all the way back, but just kind of a relief pop before heading any lower. And I have a key zone here at 166, 167 and a half. So keep an eye on your pre-market high, yesterday's low, and pre-market low. We start to give out pre-market low. We're going down to test yesterday's low and that third Keltner to the downside, that 158, 160. If we give out pre-market low. But if we can hold pre-market low, start to get through pre-market high and this zone, we could hold and rally back north of 170. So a little side eye on Netflix, a little even smaller side eye on Tesla, just in case. And finally, VIX. VIX had a key level here at 16.5. Let this slip down, got 2, gapped up, fell below, gapped above, fell back to, and rallied off of. So this is your key support for VIX to turn around and head back up, and for the market to sell back off, right? So we have our high from yesterday near 17.7 and this pre-market low near 17.25. That is the local range for VIX as we start to open up. If we are going to have a dip down to test squeeze bottoms, support, local support on the market, then we'll likely see VIX pop back up to test pre-market high and yesterday's high. And if support gives out and we sell off, we'll see VIX come up to test daily moving averages above at 18, 18.5. But if VIX stays below 17.7 and starts to roll over and lose 17, and the market is trying to rally, and if we were to get up to our resistance on the market, hold and then get through, we'll likely see VIX get down to 17, give it out, reject it, and then head back down to this base at 16.5. Overall, if it's going to be a chop day, likely between 17 and that 17.7. Back and forth. Those are the key things to watch. I'm going to throw a little alert. And we'll just call it here. I'll set it at 17.15. If we break below that, it's given more signs upside through, yeah, I'll go 17.40. Yeah, at or above 17.40. Bada bing. So we start to get through that and hold, then it's looking more like a sell-off. So that's it for prep today. Hopefully everybody found this helpful. You know, good luck today. It is an OPEX week. It's a Friday. There's going to still be balancing. There's going to be annoying pullbacks on any trying to drive up. On any drops, there's going to be dramatic pops back and then roll back over. So overall, it's good to size down on an OPEX week. You know, we get one every month. We get the big ones every quarter. If there were any weeks where we should size down, play respectively, it's these weeks, right? And because the other weeks we're usually a little riskier and we're usually hitting those 3x, 5x, 10x trades. This week, you know, it's been a little bit more base hits, a lot of 50% trades, few doubles, few big trades on those sell-offs and pop backs. And, you know, we didn't really swing anything necessarily, but overall, going back to ES to close it out. Let's see. Looks like we might get up to test this resistance early and then maybe slide back before another test to get through. Or we could hit resistance, slide back, fall even further. And then, you know, if I were to say, like, what is more likely on an OPEX Friday? Since we're going to be opening near here, maybe a quick pop-up to trap the bulls, start to fall, bounce a little bit, hard drop to get the bears all excited, trap them, fall, or pop back, and basically close flat in between the daily 15 and daily 8, right? So in between 41.50, 41.58. I can see an oscillation in each direction and then ultimately ending there. So good luck today, folks. Size down, have fun, play with profits. And thanks for tuning in. Hopefully everyone found this helpful. We'll see you in the chat.